All right. What is up, tycoons? What's up, traders? Super excited for today's video. We got to talk about TLT. Now, we came down here and closed right at our support level, hitting our 1.0 extension. I've been warning people about this gap down to 95, and I'm very, very interested in TLT now, right? We can see it's extremely oversold on the daily time frame after breaking through this little wedge that we had forming here. We're going to see, what TLT has next in store and go over a lot of the key levels. So if you want to stay tuned for the technical analysis, the technical analysis will be covered in the second half of the video. So you can go ahead and jump straight to that if you want to, or, I've got a bunch of really good data and some other charts that I want to show you guys first as well. We're going to start off here. This is the S&P 500 on top, and then we have the percentage of stocks above their 200-day and their 50-day moving average. And this is a nice way to just kind of look at some of the internals of the market. I like to look for divergences sometimes, or I also like to look when we could be getting too frothy. So I have these levels up here, and you can see that, basically once we get to about 90% of stocks on the S&P trading above their 50-day moving average, that's typically when you start to see a pullback, right? You saw a pullback here, you saw a pullback here, and then we're starting another pullback right here as well. So this is definitely something that you might want to pay attention to and start looking at, just to help get a little bit of a gauge on the market when things are maybe too frothy, perhaps. Now, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the full disclaimer. You can also email me anytime if you guys are interested for a one-on-one personal coaching session. I do those, every single week, basically. So just shoot me an email, zachlytrades@gmail.com, and we can work on scheduling a time together. Today's video is sponsored by Simply Wall Street. It's a really amazing app, a really amazing platform. All right, they have a website and app. You can use either. And if you use the link in the description below, you will get a 14-day free trial and up to 40% off for the first 100 people that join. Now, heading into August, the NASDAQ 100 was up 44% year to date, and that's its best performance through July of any year on record. So, there's been a lot of bears in the market, all right? And, a lot of people are stuck in the past of 2022 and missed out on the rally in 2023 because they weren't able to change narrative. But it's really tough to time the market. It's not something that's easy to do. But when you take a look, literally everything is up right now. So it's been an amazing year if you have any type of assets, right? And you take a look here at US stocks, okay, foreign stocks, you look at emerging markets, junk bonds, all right, foreign junk bonds, REITs, tips, commodities, everything is green, all right, and has been up. So a lot of people, aren't really feeling this recession talk and feeling that, and basically if they have any type of assets, they're seeing it go up. And so that doesn't really scream recession to a lot of people when, they're seeing everything they own go up in price. Now, we talked about timing stuff, okay? And if you take a look, we've seen a record amount of short covering. Now, if you've been in the market and you've been watching it, we were seeing short squeezes all over the place last week, right? We had SDC, we had YELL, ticker symbol YELL is probably one of the most famous ones that just happened recently. But short squeezes have been happening all across the market. And that's what we're seeing here, right? We're seeing a lot of short covering. And then, funny enough, after that short covering is when we actually started to really get the drop in the market. So, it just goes to show it's very tough to time things, and, timing the market is always going to be really difficult. So the best thing you can do is have time in the market versus timing the market. And Liz Young wrote a nice piece here, okay, and basically talking about wrong calls, going over too early or too wrong. It's no secret that bears have found themselves on the wrong side of the market, and in many ways, the economy so far this year. She counts herself as one of them. And, this is really just a good piece going over what I just said. It's very tough to time the market, and, you have a lot of people making the wrong call, and sometimes you're too early and then you change your stance, and then what do you know, it ends up happening whatever it was that you were predicting, or whatever your thesis was. So always keep your head up. All right, there's always going to be another day, and you can really just learn from your mistakes. Now, buffer ETFs have taken over $5 billion this year. They have a 23% organic growth rate, and it's now a $28 billion category. BlackRock just launched some too. And this is something that you guys might want to check out. Okay, I kind of just wanted to throw this out. Not too many people know about them, and I thought this was interesting. So you can check out some of these buffer ETFs. It's really interesting stuff in there, right? You can see the different tickers here. You can just pause the video, take a screenshot, and check out some of these. You look at the year-to-date returns, and they're not bad, right? They look pretty good. Let's go into some earnings insight real quick. So 81% of the S&P 500 companies have beaten EPS estimate to date for Q2 of 2023. This percentage is higher than the 5-year average and the 10-year average, and the information technology and consumer staples sectors have the highest beat percentages to date. Now, a lot of these kind of have been layups, right? And the reason being is because we've seen inflation come down a lot, but they're not passing these lower prices down to the customers, right, to the consumers. So really, a lot of these companies, they're able to keep their raised prices that they had from last year, and then now it's starting to cost them less. So we're seeing that basically a lot of these companies are beating across the board. One thing that's really interesting though is that if you take a look, the earnings beats are actually underperforming the earnings misses. And so what that means, and I showed it in a previous video, the companies that have been beating earnings, aren't really rallying as much as the ones that are missing on earnings. And it's just an interesting time that we're in right now. However, the market is rewarding positive EPS surprise less than average to date. So this is kind of just a chart showing you guys what I just really explained. S&P 500 companies that have beaten EPS estimates have only seen a 0.1% price increase. This percentage is below the 5-year average of a 1% price increase for positive EPS surprises. And, so just a little chart to kind of show you guys what it is that I'm talking about. We'll go ahead and move forward. And big shout out to Worth. Okay, Worth Charting, Carter Worth. I'm sure if you've ever seen CNBC, you know him. He had some really interesting takes here on Amazon. These are some ratio charts of Amazon divided by the S&P 500. And you can see since 2020, it's peaked, right? It's peaked. It's been on a sharp decline. And he was actually bullish on this, playing bullish for earnings and suggesting that maybe Amazon is starting to bottom and is due to rally some more. When you take a look at this ratio chart right here, he's explaining how they're buyers here, all right, and it's above the moving average right now. Of course, above the moving average is when typically people would be bullish, right? And you can see here, just kind of zoomed in a little bit some more, right? The Amazon versus SPY ratio chart. So big shout out to him. Amazon, did have a nice pop after earnings. You take a look at Apple, and Carter Worth nailed it again. That's why they call this guy the chart master. He was basically talking about shorting Apple, where he sees, Apple going to right around to the $180 level. And I've had some comments about Apple. And for me, it's just something that I'm not really comfortable shorting, right? If you look, it's been a very tough stock to short. And, you probably could have lost a lot of money trying to short this thing along the way up. It's been really just rising at such a rapid pace. When you take a look here, this is a perfect 45-degree angle. Perfection does exist, but it does and cannot last forever. So that was a really great line there by Carter Worth. I really like that. And you can see that, basically it's kept testing this trend line, and he's saying that eventually this thing is going to break. And it appears that, after earnings, this trend line is breaking. Apple typically is, in my opinion, a stock that always sells off. It tends to rally heading into earnings, and that earnings build up. And then it most of the time becomes a sell the news event, and you start to see a pullback in the stock. Now let's go ahead and head on over to TradingView and check out the charts for TLT. Now, as we mentioned, okay, TLT has been dropping like a rock. Now, if you've been a fan of the channel and you've been watching, we had this bearish pennant right here, and we got the breakdown retest, and now we've pushed lower, and we actually hit our target here of 94.73 today, right? If we zoom in just a little bit closer, we've been talking about on this channel, TLT coming back down to 95 to fill this gap here, and you can see that price just quickly just dropped like a rock. I mean, when we look at how big this drop is, we went from 100 all the way down to 94.85 in a very short amount of time. Some of the other warning signs that we had besides, just the chart patterns is we see right here, we see our TLT MACD indicator rolled over, right? So this white line crossed below the red line right here. And that happened right up here at this moment. And that's typically a sell signal, right? We typically see a lot of movement downwards after that. You take a look at the last TLT sell signal was up here, and we really just continued to fall since then. So, definitely pay attention to the daily MACD on TLT. I think it's a very useful indicator. You can see here we also broke through our initial bullish divergence trend line. If you're not familiar with bullish divergence, just take a look how we have a low here and then a lower low. All right, but at this point on the RSI, we have a low and we actually have a slightly higher low. So we're increasing in relative strength while decreasing in the price of the stock. And this is a simple term known as bullish divergence. And you can see that it was met with some follow through. And oftentimes, what you'll see is them come back down and try to retest that bullish divergence trend line and possibly bounce up again. But if you break that bullish divergence trend line, all right, as you can see here, it's usually met by a sharp move to the downside, and that's exactly what we got. Now, we did bounce pretty hard right around that 94.73 level today. We closed just above it. All right, at 94.85. But let's go ahead and zoom in a little bit more. Now, 102.88, I mentioned that this level has been laying the smackdown, and you can see yet again, laid the smackdown, and we ended up getting that sell signal here. If we break below 94.73, it's very possible that the next price target is going to be 92.30. Now, when we look at the lows here, okay, the lows, all right, is going to be right here at 91.87. So I'm not saying that TLT does have to retest these lows. In fact, I wouldn't be surprised if TLT started to rebound. I've been waiting for this moment for a while. And so again, not financial advice, but I have started to accumulate a long position for the long term in TLT now. Patience is a virtue and patience pays. We like to spell patience with P-A-Y, all right? Because if you have patience and you're not rushing and you're not FOMOing in up here and you're just patient enough, you can get the levels that you're looking for based on, having the right technical analysis. And so while there is risk and we could go lower, if you take a look, many times after we've come into this oversold territory, we've seen a very, very strong rebound in the price of TLT. If you take a look here, okay, it made those lows, all right, just below 92, and then it rallied all the way up to 109. That was the last time that we were in these oversold conditions. You can see here as well, all right, we started to build some bullish divergence in these oversold conditions as well, making these lower lows while making these higher lows. And then we got a strong move from 108 all the way up to 120. So not saying that this thing has to rebound immediately. In fact, this is actually a great example. You can see here, all right, let me draw you guys a nice vertical line. Right, you can see here, this is basically when we hit those oversold levels, right, which is very close to where we are right now. But the stock continued to go lower, right, and made another lower low and another lower low. So you do have to be cautious of that. If you're trying to go all in right now, just because something is oversold, it doesn't mean it can't go lower. Right. And oftentimes that does end up happening and does end up being the case. The oversold and the overbought, I see a lot of people misusing these things. It's telling you where the strength is right now. So if something is oversold, there's a good chance that it could end up going lower. Now, that doesn't mean that the RSI can't go higher and it can't get less oversold. But most of the times, you see people only try to short something when it's overbought, only try to long something when it's oversold. And, that's never going to work 100% of the time, right? Oftentimes it will work, but, you have to keep in mind that just because something's oversold doesn't mean it can't go lower, as we see here. And just because something is, overbought doesn't mean it can't go higher either. So you do want to keep that in mind. Now, if we start to get a rebound in TLT, there's a couple things that I would look for, right? We have 96.65 is going to be a new resistance level. We have 98.15 is going to be a new resistance level. But if we take a look here, we actually have a few gaps up to fill, right? Now, gaps tend to fill about 90% of the time. The big question is when, right? Not so much if. And if you take a look here, we've got 3 gaps up to fill now on TLT. We're in oversold conditions. So I don't mind, as I mentioned before, playing for, the long term, right? And if this thing continues to go lower, right, I will reevaluate and potentially look at some new levels that I may want to add in that. But for right now, right, if we are playing these 3 gaps, we can see that we could potentially see a move back up to $99.58. Now, this could happen soon. This could happen within a week, or this may take months or even years to happen. right? That's something that you want to keep in mind. When we take a look at the big gap down that we had, all right, and we do have more gaps up to fill on TLT as well. You can see we have gaps all the way up here to about 111. There's even more, okay? There's more gaps, more gaps. These are just, some of the closer and more relevant ones. But if you see here, this was in November of 2022, and here we are in August of 2023, almost a full year. Not necessarily, but very close to a full year is how long it took for this gap down to fill. And, I've been waiting patiently, and finally this gap has filled. So if you enjoyed this video and you want to see more technical analysis of the bond market, you should watch this next video right here, okay? I'm actually breaking down TLT, HYG. We're going to take a look at the TNX, the 10-year Treasury, as well as some other bond funds in there as well. All right, so click on that if you want to see some more technical analysis. If not, appreciate you guys watching. Smash the like button, subscribe for more.